of commodities. Hi, I'm DJ Okpakunle. I work for Dr. Doyin Salami at Kainos Edge Consulting in the Market Practice Unit. I'll be taking you through two of the major publications we put out periodically through the course of the year for AFEX Commodities. This consists of a weekly report and a monthly report of general agricultural prices across production zones in the country and the price differences between the market survey, which is the physical markets in the northern production areas, which gives a collection of the market survey prices from the wholesalers, particularly at the farm gate, and then the exchange executed prices, that is the prices which are offered on the AFEX exchange. So first off, to give a context of AFEX footprint in determining the market survey prices, I would like to show this map, which gives the crop survey coverage and market coverage for particular crops which are covered in the reports. We have 6 particular crops of interest that are covered weekly and monthly on the commodities reports, which are soya beans, paddy rice, and maize, as Akinka mentioned earlier. Then in addition to that, other commodities which may not be as fluid or may not be as liquid as maize, paddy rice, and soya beans, which are sorghum, ginger, and cocoa. We also cover those prices from the weekly and monthly reports. Now, particularly if you looked at the map that Akinka showed prior to this presentation, it showed the area mapping of production for maize. And going by that, we could easily extrapolate that the production is higher in the middle belt and part of the northeast of the northwest of Nigeria. So which is why I have separated this into the 6 geopolitical zones of the country. So given a context to the scope of the reports, I don't know if there's anyone here who has gone through the reports prior to today or who has had a chance or opportunity today to go through the reports. The weekly report gives an index performance of the last trading day of the week, which always comes up on Thursdays every week. So it gives a snapshot of the performance of the index, which was produced by AFEX Commodities. It is named the AFEX Commodities Index. And this gives the index numbers for paddy rice, maize, and soya beans, and the percentage change week on week for the performance of the index numbers. I would further explain for anyone who does not have a firm grasp of what the index typifies. And then it gives an index chart that gives that shows the performance of the index over the past 1 year. Then there is a price performance for the commodities on the exchange, and then the market survey price, which is those fiscal markets which I mentioned earlier, and then a logistics grid, which Akinka had tried to mention earlier. And this just shows the cost of moving these products from the production areas to the areas of highest consumption. So, like for instance, he mentioned that for paddy rice, it is majorly milled in Kebbi State. When you take into context the collaboration between Lagos State and Kebbi State for the lake rice, and also the historical production concentration of paddy rice in the northwest of Nigeria, particularly Kebbi State. Then the monthly report gives a market summary of commodities from all markets within Nigeria and a context of the international markets, which just gives us a grasp of what is happening in the international markets when we are within our lean seasons. Like he mentioned earlier, that we have just one planting season because of the low adoption of irrigation within the country. And so for that reason, there are lean periods for every that are distinct for each commodity. Like for the lean period for soya beans is different from the lean period for paddy rice, is different from the lean period for maize across the country. When you take into consideration that a crop like soya beans has its highest production in Benue State, which is in the middle belt. And so the rainfall intensity through the course of the year varies from the northwest where paddy rice is produced. So you expect that if the storage capacity or the the players within the value chain that take care of storage are not as plentiful to cover the demand for the country, there will be a lean period whereby this commodity may not be as liquid, as readily available as it will be when there is a glut after harvest, sometime around December, towards the end of the year where the new season starts. So placing this on the context of AFEX cycle, AFEX trading cycle, AFEX takes the agricultural season to start from December of each year, which is when majority of harvest comes in. So at that point in time, there is a glut and prices are generally low. So people who, or market players who function within the aggregation aspect of the value chain do a lot of buying and storage. And then the index monitor. So I would go through this individually. And now for those who would like to give their own perspective of how the market is performing, there are particular tools that we utilize in collaboration with AFEX Commodities to explain those price changes both on the index and in the physical markets. And the index in this context is related primarily to AFEX prices, which are offered on the exchange. So take note of these three tools, which I would expatiate further down the line. The first is the price index, which interchangeably I will refer to as the ACI, which is the AFEX Commodities Index. The AFEX Commodities Index just shows how the market is performing for each commodity or for a group of commodities, which are paddy rice, soya beans, and maize through the course of their trades from 2016. 2016 is taken as the base year. So let's say from assuming the price of paddy rice was 100 naira per kg in 2016. And in 2017, the average price through the course of the year was 117 naira. And then 2018, it became 125 naira. The index would show that the base price or the base percentage point of the price for 2016 would be 100 for the sub-index for paddy rice. Then in 2017 to become 117, because like we said, say the price has increased, where a good way to visualize this at the back of your mind is to look at consumer price inflation that is released by the National Bureau of Statistics on a monthly basis. So if we take 100 naira for 2016, which is the base year for the AFEX Commodities Index, it becomes 107, and you see 117 in 2017, and you see 123 in 2018, and let's say 140 in 2019. It gives you a fair idea of how this price cycle or how this price is progressing over the course of the years. And if you look at it from December to December, from like December of 2017 to December of 2018, which is the crop cycle or the trading cycle for AFEX commodities, it will give you an idea of the price movement for that commodity over the course of that trading cycle. I hope that gives us a context of how the price index works, because I would show you a snapshot of the sub-indices and then the composite index, which combines soya beans, paddy rice, and maize. Now, the price volatility. Now, if we say the ACI is a tool utilized to measure the changes for the commodity prices against the base period, which is 2016, the price volatility would show you how fast or the rate of change for these prices. It gives it in percentages. Let's say, for instance, in January of 2019, the price volatility for maize, let's say, for instance, is 9% on the market survey. That of the AFEX may be 3%. Another number for paddy rice, let's say, is 4%. That is the rate of change of this price is 4%. It's within a 4% band. And then say that of the AFEX exchange is 2%. It gives you a context that, the prices on the AFEX exchange is less volatile and more stable than the market survey, which is all markets or a selection of markets across Nigeria. Now, if I may just take you back to this map, the production areas, like we have seen for maize, which Akinka has shown earlier, is particularly concentrated within the middle, where is referred to as the middle belt more often. Niger State, Kwara, Nasarawa Plateau, Kaduna, and then Benue. For soya beans, 70% of soya beans in Nigeria is produced in Benue State. So this AFEX index is actually a weighted, gives you a weight, is a weighted index of production areas within the total context of the production areas in Nigeria. So let's go back to the third slide, where we have the price volatility. So that's the context of price volatility. And then sentiment analysis. AFEX has a very wide and very broad penetration within their warehouses and production areas among smallholder farmers and even aggregators that come after those smallholder farmers. So it's easy to get opinions from them on the reasons as to why prices are changing over the course of the year. It's easy for them to get an understanding of the dynamics of these price changes. That is it that there has been disease, dry rot for your crops? Is it that inputs were expensive, or is it that labor was more expensive? They give you a feel that you may not get on a granular level that they would have because they are involved in that production directly. So these are factors that we take into consideration for determining the prices and also for churning out these reports to give those who are interested in the price dynamics of commodities. And then let's go deep into the features of the report. Now, the price data, there are two principal prices that are represented on the weekly report. The market survey report, the market survey prices, and the AFEX exchange prices. Now, the market survey prices covers 108 markets across Nigeria. And so this sample size is nationally representative to give you a single average price across the country, taking into consideration the cost of logistics to take, say, maize from the areas of highest production within the middle belt down to the areas of highest consumption, which is Oyo State, say Bodija market. It adds the cost of logistics and then gives you the minimum price across the country from this 108 markets and also the aggregators across AFEX's network. And then the maximum price is also week on week. And then the singular average price across the country, subject to our price methodology. Now, the week-on-week change also shows you what's a reflection of what it was last week and what it is this week. So for those who are willing to make trades or interested in making trades or monitoring the trend of the market, it shows you how it's increasing or decreasing. Let's say, for instance, the average price for these prices are actually real prices from March of this year. The average price for March for maize was 85 naira 40 kobo per kg. It's increased 0.47% week on week. for the first week in March. And then season to date prices shows it's a reflection of the beginning of the season, which is December, as I mentioned earlier, to that particular point when the report was released. So if there's a decrease or an increase, it shows that. So for those who have invested within the market can now have a reflection of how much they have gained on their assets, because the idea is to make these assets bankable. So they want to know how much they have made from their storage of these commodities over the course of the year. Gives you an idea of when to trade, when to put in a sell order, or when to buy if you are given an opportunity of an arbitrage against what the current market prices are. So that gives you a full view of what AFEX exchange prices are, and also the physical market prices across our 108 markets within the network of AFEX. So next is the price index. Now the price index is always reflected as the second item after the snapshot of the last trading day of the week. The price index, like I mentioned, gives you an idea of how this price is changing. The market activity for a combination of paddy rice, maize, and soya beans. So this price changes is the price change for this basket of this basket of goods. Those three goods are reflected in the composite index within the price report. And then we give a breakdown of what the price, the sub-indices within the price index shows for maize, paddy rice, and soya beans. Those three commodities particularly. And now, in addition to these three commodities, like I mentioned, there are 6 commodities that are covered in the report. 3 other commodities, cocoa, ginger, and sorghum, are also reflected in our prices, but not on the index, because those are not as liquid as these 3 commodities. And so you can monitor these individual commodities through the sub-indices. Now, lastly, your question is about how prices are determined or how prices perform. Both. Okay. Now, for price determination, as I had mentioned earlier, the price determination is by surveying the markets within the production areas, getting an average based on the weights of production state by state, and then determining what the best possible price is across board, across the production areas, which is the first point of call after production. Now, the price performance can easily be extrapolated from the index performance, which is within the report also. It gives you a month-on-month, year-on-year, and a week-on-week performance. The week-on-week performance is, of course, within the first table I mentioned, or I showed, and then this shows a month-on-month, year-on-year, and season to date. So you can easily compare what the price change is from, say, this month is June, what the price change is from last month to this month, or what the price change is from June last year to June this year, and then from the beginning of the season when the glut of production was in place, and then depending on what points within the season the report is being released. If it's within a period of high availability or low availability where there's scarcity. So then this index performance shows all that on a snapshot for the entire month. So this, for instance, is for the entire composite for the month of March. And this also can be requested from AFEX if you need a better granularity for a week-on-week basis, as the reports are released for the weekly reports, because this is not available on the weekly report. But at least you can get that granularity on request at any point in time. Now, for the price volatility, I mentioned earlier that we try to calculate with 3 basic tools on how the price is performing within the market at every point in time. Price volatility, market survey prices, AFEX exchange prices, and the index, which shows the performance from the base year of 2016. Now, the price volatility just gives you a reflection of the better choice on making your trades. Now, if you look across, the MSP is the market survey price, which covers all markets, 108 markets within the network of the market survey price. The exchange executed price is the daily price on the AFEX exchange, which is determined by the AFEX closing price methodology. The AFEX exchange prices over time, because it is statistically determined, has been shown that over time it gives a lower price points than what is available in the market, showing that the value addition of proper storage, a distribution network that works, and also direct connection to outgrowers, smallholder farmers, and aggregators cuts out a lot of middleman activity, with AFEX being the direct consort between consumers and producers. So those prices are, AFEX exchange prices are actually lower and less volatile because of these better methods of storage across their warehouses. So the data from January showed that the fiscal markets had a 16% volatility, while AFEX exchange had a 5% volatility for maize. It's more stable. It's a lower price point. So this gives a better value for those who are trading within commodities within Nigeria. It gives them a value proposition to show that there are more reliable prices on AFEX than going to the fiscal markets, where you are not sure of the quality, you are not sure of the standard across board. Because like he mentioned, there are 3 grades to these commodities. There's grade 1, grade 2, grade 3, taking into factor the moisture level, whether they are broken grains whether they are broken grains or whole grains, they are shriveled grains, the grains are whole, the quality of the grains in terms of color, in terms of mold, and all that. It's a whole combination of qualities that we look out for while gathering these grains. So you are sure that you don't get a lower quality than what the acceptable standard on the AFEX exchange is. You are sure that across board, if you buy in January or you buy in March, it's the same grain you are buying of the same quality, as opposed to fiscal markets where you have to use your experience to purchase these grains. And so this is data that is offered in the price report as to better price points and market volatility. Now, on the value proposition of this, who is consuming your insights, or who is consuming your interpretation of the insights which are contained in this report. It gives you an idea of how industrials can carry out their operations planning, how they are empowered to negotiate in making trade decisions. Let's say they want to do trade financing, they want to determine what point in the season is best to stock their inventory, or when it's best to sell out or clear out their inventory. Procurement decision making, and then strategy and advisory for those who are also middlemen and want to rely on the reliability of the AFEX exchange in terms of the prices offered on their exchange. So at this point, I would like to take any questions that have to do with the report from all I have mentioned. Is there any part that is not clear? Yeah.
For soybean for January, the volatility for AFEX is higher than for the European markets. And there it goes against what we've been saying, that it's counterintuitive anyway. Open market should be more volatile than what obtains on the
Okay, so I'll give a brief explanation as to that January. It's actually reflective of the harvest period for soya beans. Now, you would not get this number, which was obtained here in January. It's unlikely you get these numbers at any other point through the course of the season because soya beans harvest starts around December, January. So there's a glut in the market. And so the volatility for the market survey drops because of the glut. Meanwhile, AFEX has stored these goods over the course of the year and they are also stocking. So the volatility is much higher. Now, it is not totally complete to look at this volatility in exclusivity to the actual prices. What we noticed for this January volatility was that even though the market price volatility was lower than AFEX volatility by about 50%, AFEX prices were actually lower in terms of the actual pinpoint price for soya beans per kg in comparison with market survey prices, though the volatility was higher. So you have to compare those two data points that, okay, even though the volatility is higher, what is the offer price on AFEX exchange and what is the offer price across, or the single country average price across the country. So that gives us a context as to why this seems to go against all I have said.
I was privileged to work with a